Hi there. I thought today we would start working on the AJE handout. So I need for you to get two things together. And then the way this will work is we'll read the transaction and then you'll turn off the tape and make the journal entry and then turn it back on and check with me to see how you did. So you need two things. One is under the chapter 2 area, and it is a general journal to practice on. Or you can just make your own journal up in your book. You need 5 columns: date, description, a very thin column called PR, posting reference, that we put in the number of the account when we post the journal entry to the ledger, and then a debit and credit column. So either make your own general journal or open this. And then the second thing you need in the AJE section is to open handout number 2. So turn off the tape, get those together, and I'm going to launch into these. Again, we'll read it, we'll talk about it, and then you will probably turn off the tape and make your journal entry. So again, remember, we've got 4 kinds of AJEs, and every time we make one, we're going to check it that we've used a balance sheet account and an income statement account, and we haven't impacted the cash account. So, and you're supposed to label each of these. When it says 5 kinds of AJEs, that is counting depreciation as its own type. So deferred revenue, deferred expense, accrued revenue, accrued expense, and depreciation. On January 1st, Juan purchased a 2-year insurance policy for $6,300. So first, make the journal entry when he bought the policy, and second, make the AJE. So the January 1st journal entry, he's just writing the check, and then he's used up 1 month of the insurance policy, and then tell me what type it is. So turn off the tape and do that, please. Okay, so on this one, the first thing we do when we purchase the insurance is we debit prepaid insurance. It's an asset, it goes on the balance sheet. And then after 1 month, we've used up 1/24 of it. So we have to debit insurance expense, and we've used up a piece of the asset. And this is a deferred expense AJE. Okay, so we've moved it from the balance sheet and to the income statement. On August 1st, Sherry received $89,000 in advanced sales for ski passes at her mountain. The ski hill is open December 1st through March 31st. So I want you to make the August 1st journal entry when she gets the cash. And then at the end of August, or at the end of December, when 1 month, the ski hill has been open 1 month, and then tell me what type of journal entry it is. So turn off the tape and I'll meet you back. Okay, so in this example, when they made the original journal entry, when she got the cash, it increased her asset of cash and it increased her liability. Again, remember, this word always means liability. She owed $89,000 worth of services. After 1 month of the ski hill being open, right, because it opened on December 1st, she's used up or paid off 1/4 of that liability, and she has earned revenue. And this was a deferred revenue HAE. Number 3, on 10/15, you purchased an automobile for $12,500 for his business. It has a 3-year life. On 12/31, you closed the books. So I want you to make the 10/15 journal entry when he bought the car, and then we need to make a 12/31 HAE, and that would be for half of October, all of November, all of December. And I tell you to use, and this isn't exactly correct, it's got a 3-year life, so it's going over 36 months, and we're depreciating 2.5 months of it. So shut off the tape and let's go talk about this. Okay, so when he bought the cash, he wrote a check. Vehicle is a fixed asset, it goes on the balance sheet. Then after 2.5 months, I come down and I figure out how much does this vehicle depreciate per month? And that doesn't mean it goes down in value. It means I'm allocating the cost of the vehicle over 36 months. So it goes down, or I write it off, $347.22 a month times 2.5 months. I debit a profit and loss account depreciation expense. It's just like any other expense on my P&L. And I credit accumulated depreciation. And then it goes on to ask me, what type of account is accumulated depreciation? It's a contra asset. What financial statement does it go on? The balance sheet. And what is its normal balance? It's a credit. And what type of HAE is it? It's a big chunk of prepaid expense, right? So I prepaid a vehicle that's going to help me earn revenue for 3 years. Okay, the next one. On February 28th, Sanjia owes her employees for 1 week of work, $896. So they've worked the last week of February, but she's not going to run payroll until March 13th. She runs a semi-monthly payroll of $1,966. And this includes February's wages that were accrued. So I want you to make the journal entry on February 28th. Remember, you have to get the accrued wage expense into that month. You're not going to be touching cash. She's not paying cash. So make the HAE to accrue her wages. And then on March 13th, she's going to run a payroll. Part of that payroll is going to be the $896 she owes from February, and the balance of it belongs in the month of March. And then I want you to know, what does her P&L show for wage expense for February, and what does her P&L show for wage expense for March? So shut off the tape and go ahead and go do that. So the first journal entry is to debit wage expense and credit wages payable. Whenever you are making an accrued expense AJE, you will use a payable account. Now we go a couple weeks later and she's actually writing out the paycheck. So just to start, I'm going to credit the cash first because I know she wrote a check for 1966. Okay. Now, what was in that? This 896 was part of it. And then there was some expense that belongs in the month of March. So first, let's get off this liability. She no longer owes that because that's what she's paying her employees right now. The balance, the difference of $1,070 is wage expense that belongs in the month of March. And this is the matching principle, matching the expenses in the month that they help to earn revenue. So that's what this looks like. Okay, number 6 or 5. On August 6th, Louis paid for a 1-year lease for commercial real estate of $13,000. Then he's got to make a journal entry at the end of August. He's used up 24 days of that rent. And then in September, he's used up a whole month of it. So you could use, 1/12. So you're going to make the original journal entry, the 2 AJEs for August and September. And then I want you to actually physically set up your T accounts and post these transactions and tell me what the balance in the asset account that you're using is. So shut off the tape and go make the 8, 6, 8:30, and 9:30 entries and then post to the T accounts. Let's see, so the math for the first part is $13,000 times 24/365. So my rent expense per day is $35.62 times 24 days I used up. So I've used up $854.80. I don't have that asset anymore, and it's moving on to the balance sheet. And this is, of course, a type of deferred or prepaid expense AJ. Then we go one more month, and this time the rest of the life of it, I can just take 1/12, right? Because for 1 month. So that's $1,083.33. And that was 13,000. Oops. Then if you make your T accounts, the first thing you do is you post $13,000 on the debit side of your prepaid expense. Then you've posted a credit of $854.80, a credit of $1,083.33. So my question was, what is your balance sheet account at the end of August? The balance in your prepaid expense or prepaid rent account. So you've got, your T account is drawn, got one debit, two credits, and then you draw a line and you balance it. And the ending balance down here is $11,061.87. Okay, then in number 6, it says use the same scenario, except this time you own the building and a tenant has paid you the $13,000 for 1 year of rent in your facility. So we're going to use all the same numbers, except for this time you got the cash and you have to provide the space to a tenant. So what are we doing here? Got the cash. Can I book revenue? And I can't because I haven't earned it yet. It's unearned rental revenue. So at the end of August, same numbers, I've got to move a little piece of that unearned rental revenue onto the P&L. Etc., etc. Okay, the only other thing I'd like to go over with you is when you start doing our journal entries for interest. We practice this on the last tape to calculate interest. It's principal times rate times time. And please make note that when you set up an original note, like here, Tam loaned his business associate $10,000. So that's a note receivable because the business associate owes Tam the money. If I borrow money from somebody, it's a note payable because I owe them money. And I have to accrue either interest revenue, if it's a note receivable, or I have to accrue interest payable if it's a note payable. I don't ever go back to the original note receivable or note payable account. I do it all through interest expense, interest payable, or interest receivable, interest revenue. And here's the calculation. And remember, your rate is your annual interest rate. In this case, it's 0.08. And time is something divided by 12, right? How many months? So go ahead. Let me just see what my notes say here. So to finish this up, this is the last lecture that I will, let me share. This is the last lecture that I will do for chapter 3. So you should go and use the solutions manual that's open on Moodle and check all those ones from the last time. Quick Study 3-4, Quick Study 3-6, Quick Study 3-7, etc., etc. And I've got that all lined out in the tasks as well. So go check those on the solutions manual that you did those correctly. Then to finish this off, you will do these last journal entries. I don't know why I don't have number 7, 8, 9, 10, and 11. And I'm sorry, I do have one more lecture posted where I go over these last 4 journal entries with you. And then the last thing that you should do is on page 115 to prepare for the work and connect. The last thing you should do is P3-2A. and that is on page 115 in your book. And then again, you will go, that's probably about an hour of work. Then you will go check that with the solutions manual. You'll check these last 4 journal entries with the 4th and final lecture for chapter 3. So let me know if you need anything. This is kind of tough work, I know that, but really takes practice to understand. Okay, take care. Thanks. Bye.